Cool. Hey, fellas. So yeah, just want to have a quick chat just on interest rates with March 2nd coming around the corner here. Just want to look at, what the prospective increase or interest rates would do to that market. I got Lorenzo and Dave on the line here. So yeah, good chat. How are you, fellas?
Good, man. How are you?
Yeah, very good stuff. Yeah. Davey, all good?
Good to
Always
be
happy to be here. You always are.
good to be
Yeah.
here, man. Yeah, I got my corner office.
Good stuff.
A
Yeah.
5 o'clock on a Tuesday.
Yeah, perfect
Awesome.
timing. Yeah. So Lorenzo, I mean, kind of that mortgage expert space, like from what you're seeing, we're looking at that maybe that 25 basis point increase. Is that really going to be that, that big kind of stop to the seller's market or?
To the market, yeah, to be honest with you, I guess we'll see. I don't know personally if it's going to do that much of an issue. Obviously, Dave would be pretty good to answer that. But I guess in terms of what you're seeing on the mortgage side is, yeah, it's likely going to increase by about 25 basis points. So right now, prime is 2.45. So obviously, add 25 to that. So tomorrow we might be seeing prime jump up to 2.7. So what that means for everyone kind of has mortgages right now in variable rates is that whatever your discount is right now, for example, if you're prime minus 45, so your rate's 2% today, well, your rate's now going to go up by 25 basis points to stick with that same discount that prime is. So obviously we're going to see increase in everybody's overall rate. Depending on which bank you're with too is going to be very big for some people. Some banks have a payment where it structures that if the rate goes up, the payment increases. Some banks have the structure where the payment always stays the same over the 5 years, but just the principal and interest portion then changes. So regardless of kind of where you sit on that, you're either going to be paying a lot less principal down over the next couple of years, or you're going to be paying higher monthly payment. So we'll see what it does. Again, it's only 25 basis points. I don't know it's gonna be too big of a factor. Everyone's rates are still super low right now, so it might not be anything earth shattering, but yeah, it's definitely, they are going up for sure tomorrow.
Definitely. Yeah, definitely. Yeah. Dave, anything on your side there? I mean, you're kind of in that seat as well from the investor side. So
Yeah, I mean, for investors, it's always hard to look at monthly budgets when you're working with variable rate mortgages because it's a number that's going to change over time. So when we've been looking at variable rate mortgages and running the numbers, we've already been incorporating the fact that the interest rate is going to be higher in the next 6 months to a year. So this news isn't really catching anybody by surprise, or we're assuming rates are going to go up, and it seems to be a slam dunk at this point. Yeah, I mean, we've already seen fixed rates kind of edge up, and fixed rates are usually what we'll use to run the numbers on investment properties, and even for clients, first-time home buyers, or move-up buyers. We're generally running the monthly costs based on a fixed rate, and then once they're comfortable with that, and have a good handle on the numbers, then we will look at options to move into a variable rate. Obviously, right now, and Lorenzo can probably give us some more insight on this, variable rates are a lot lower than fixed rates. Yeah. So, if you're good with the numbers that have fixed rate, then we can look at, what type of risks you might be taking on, and what your kind of 5-year projections are in terms of cash flow with moving to a variable product. So the bigger thing, I think, the announcement tomorrow is going to raise variable rates. I think the bigger thing that we've seen in the market has been the fact that we've seen upward pressure even on the fixed rates as well. And I think there's been some movement there in the last few months. Worth noting though, like anybody that's already been pre-approved for a mortgage, which is usually one of the first pieces of advice we give clients when they come in and look to purchase or invest, is to get a rate locked in. So we've got clients that even though rates are going up tomorrow, they may have a rate locked in so for the next couple of months. So the announcement tomorrow is not going to have a direct impact on their monthly budgets if they make a purchase in the next 90 to 120 days.
Yeah, I think that's a great point. I mean, you kind of look at the forecasting of that spring market, like is this rate increase going to have an impact on that? Likely not. I think it's probably going to curb maybe a little bit of enthusiasm just from that affordability side. But I think generally, if you're kind of building that, fixed rate income property perspective first, and then coming back to that cheaper variable rate, you're probably mitigating a lot of the risks there, just in terms of any kind of fluctuations in that market. Yeah, for sure. Lorenzo, anything you got? I mean, looking at kind of the next couple of months, like into April, June, those other kind of monthly increases, is that kind of what you guys are thinking as well, just on those
I think
sides?
you're gonna, yeah, we think they're gonna keep going up. So like obviously talk to a lot of different people in the banking world. They've even come out, the bank can't even come out and said it themselves. They're likely looking. So right now the overnight rate as of like March 1st was like 0.25 for the banks. They're looking to try to get that rate. Obviously tomorrow they're going to increase, or we believe they're going to increase by about 25 basis points.
Yep.
By the end of the year, they want to try to get that up to like 1% or 1.25%. So I think over the next probably year or so, we're going to see a number of these rate increases just to kind of get us back to where we're pre-COVID levels, right? So everyone kind of, I guess, remembers before COVID, the prime was like 3.95%. And then as soon as COVID hit, we had 4 or 5 rate drop or 4 or 5 prime drops that got everyone's rate. That was crazy. Though we kind of got used to it over the past 2 years, year and a half, of these crazy low rates. And now they're trying to probably make an effort to kind of bring it back to where we were before. So over the next year or so is what kind of everyone's anticipating, and what the banks are kind of forecasting for themselves, is that we're going to be about probably another full basis point higher, or full 100 basis points higher in terms of the overall rates.
Definitely. Yeah, very cool. That's awesome. All right, guys. Well, Judy, yeah, great touch point. I think that's great. We'll see what happens on the rest of the spring market. But yeah, great chat, guys. Appreciate it, fellas.